Hello, Accounting 203 students. This is Professor Hassey. This is our Week 4 weekend update video. Today's date is Saturday, July 1st. And happy 4th of July weekend, everybody. Hope you're enjoying your weekend and don't have to worry too much about accounting. Your only assessed work or assignment work this week is to complete the student discussion forum, as you can see it here, to let me know your project paper. Give me a company that you select, a publicly traded company, and you'll be answering some questions by finding their 10K filing for their most recent completed fiscal year. So I need your company that you're going to do work on in this paper. You don't have to start the paper. The paper's not due till July 30th. And I'll explain more about the paper in my week 5 lecture video this coming Monday, July 3rd. So again, this weekend, if you could post the company that you are working on. We're completing our accounting cycle this weekend, this week 4, leading into our next assignment, which will cover the entire accounting cycle next week, be posted on Monday. So we're reviewing problem 4.1a, and if you look in the week 4 file folder, you'll see the problem 4.1a, what it is, and then a lecture spreadsheet of the answers and solutions to that problem. This is a great template for the completing the accounting cycle, and we started it on our lecture video for week 4 a few days ago, and we're going to finish that today, and that'll complete our accounting cycle work, which you'll be assessed that cycle in our next assignment posted again on Monday, July 3rd. So here we are with the problem 4.1a, and we're going to complete this problem today. As you can see, I'm live and in color from our my office here in Claremont, California on this Saturday, July 1st. As you can see in the background, I have golf on. It's a holiday weekend, and golf is primarily my interest this weekend, besides accounting. So let's take a look at where we stand in problem 4.1a. Earlier this week in week 4, we did the journal entries for the company. Now, let me just step back here and let me show you something else before I get really into the problem. One moment. Here's the problem from our textbook. And again, you can download this problem if you don't have a textbook, but I think you all do. First of all, this is the accounting cycle in one problem. If you can do this, remember I posted the grades from assignment number 2 the other day, and I'm going to go over that as soon as we finish with this problem in our update video today. We'll go over a couple of points from that assignment that started the accounting cycle. And now in this problem, an all-in-one problem, and this will be fairly similar to the work you're going to have to do this next week, is complete the accounting cycle. The first part was to record the original journal entries of April 1st through 30th, then post them to the general ledger with these accounts set up, then prepare an unadjusted trial balance based on those original journal entries, and then prepare adjusting entries, which we'll talk about today. From that, prepare another trial balance, and then prepare the financial statements and the closing journal entries. So that's this problem. So if you have this problem in your notes, this is a great study guide for the assignment for next week. Okay, so as we did last week, we determined, or earlier this week, we did the journal entries. Here's the original entries, April 1 to 30th. Then I posted them to the general ledger that's set up over here. Remember, a posting is to take each account and post to the appropriate account that it's located in. Then from that, we prepared a trial balance of $58,000, which is not a financial statement. It's just a statement of all the account balances in our general ledger. And then we went ahead and now we're preparing the adjusting entries, where we're recording a series of adjustments to the accounts. Prepaid insurance becomes expired insurance, the use of supplies, the recording of depreciation expense for the depreciation of our fixed asset, computer equipment, A recording of salaries expense that have been incurred. In other words, we owe the money, it's a liability. And earnings or revenue received but yet paid to us, so it's accounts receivable. So these are typical examples of adjusting entries. So once we recorded those adjusting entries, we posted them back to the general ledger, and then we prepared an adjusted trial balance. Note the difference from our unadjusted trial balance here, 58,000. And now after our adjusting entries, it now becomes $60,670. From this adjusted trial balance, we now can prepare the income statements. And this is something that some of us had some difficulties in our previous assignment, is taking the information that you have in your general ledger and recording it in a format that goes public. In other words, this is the statements that people receive, investors, even the management within your company, potential investors, the IRS, the government, just the general public. Remember, every publicly traded company in America is required by law to prepare and produce and publish financial statements on a quarterly basis. That's what the 10K is all about that you're doing your project paper on. The 10K is the required by law financial statements and information of a company at the end of their fiscal year. That's the 10K. Then there's a 10Q, which is a quarterly filing. Well, here's the financial statements for this company from problem 41A. Notice the income statement for a period ending April 30th just takes all the revenue and expense accounts. I've highlighted them here in yellow. Notice there's no asset, no liabilities, no capital accounts, no owner's equity accounts in the income statement. It's a statement of revenues and expenses. Notice commissions earned, $97.50. That's the balance in the commissions earned account. Notice all the rent expenses totaling $7,553. So in other words, this company made $2,197 in profits. That $2,197 is now part of the statement of owner's equity. How much did the owner of this business have in the business? Remember, there's no beginning balance. Matter of fact, let's change that spelling there, Professor Hasse. There we go. There's no beginning balance. So owner investment, the owner invested $50,000. Remember that transaction way back on April 1st, the owner's setting up the business. Then they made a profit from our income statement. And then remember, they took out $1,500 as a withdrawal. That was on April 30th. The net effect is $50,697. Owner investment plus profits less withdrawals. If this was a corporation, it'd be common stock investment. It'd be net income or profits, and it'd become owner's withdrawal would be dividends if this was a corporation. But this is a proprietorship, so it's a single owner. Notice the $50,697 now is part of the equity section of the balance sheet. And this is where all the other unadjusted adjusted trial balance numbers go to. All the assets, all the liabilities, they come now to the balance sheet. The assets of cash, computer equipment, which was the original cost, less the depreciation up to this point in time, supplies, prepaid, receivable, $51,117. A salary payable, and there's the equity balance from our owner's equity statement. And notice they equal. You done good. The balance sheet is in balance. There's still 2 more steps left to do in the accounting cycle. We now have to what is called do the closing journal entries. In other words, we got to set the books up for the month of May. And it's very simple. Closing entries close out or zero out all temporary accounts. What's a temporary account? Revenue, expense, and owner's withdrawal. All the other accounts, they move forward into the month of May. Asset accounts, cash, equipment, supplies, prepaid, accumulated depreciation, accounts receivable, liability accounts, salaries payable, capital accounts. They all move forward into the next cycle, but all the temporary accounts are closed. So notice here is my closing journal entries. The owner withdrawal, remember from our general ledger, the owner withdrawal had a balance of $1,500 debit. We now are going to close that account by crediting owner's withdrawal and charging the capital account $1,500 debit. We have now zeroed out the owner withdrawal. Why? Again, because it's a temporary account. We want to see in the month of May how many owner withdrawals there'll be in May. So we zero it out. Revenue accounts, commission fees earned, had a credit balance of $97.50. Where is it here? There it is right there, $97.50. Now we're going to close that account out in our closing entries by debiting commissions fees earned. That'll zero it out on the general ledger. And we credit what now is called income summary, $97.50. Now, income summary is another account that we create to be the closing account that these numbers flow through as we do the closing entries. Income summary, $97.50 credit. Now we close out all those expense accounts with the debit balances: rent, repairs, telephone, insurance, supplies, depreciation, and salary. Those are all credited. And the total amount of the expenses, $7,553, are debited to income summary. Remember, we want to see what our expenses and revenues are going to be in the month of May. This is why we zero them out. And then finally, notice in our income summary account, we have a credit of $97.50. That's the closing of the revenue accounts. We have a debit of $75.53. That's the closing of the expense accounts. And now the final closing entry will be to credit income summary, debit income summary, $21.97, to close that account out. Notice here, debit income summary, and the final credit increases the capital account by a credit of $21.97. We have now closed all the revenue and expense and are now sitting in the capital account of $21.97. If we look at the general ledger capital account here, see, there's the owner investment, the owner withdrawal, the net income of the company, and the ending balance. These are closing entries. And so we've now closed out all those accounts. They are now all zero, and we now can begin the month of May with no revenue balances, no expense balances, no income summary balances, and no withdrawal balances. They're now zeroed out. And that's our closing entries right here that you need to prepare this coming week. And then finally, the last financial information you have to do, it's not a statement, it's just one more trial balance, is now what is called the post-closing trial balance, where you record all the remaining balances that go forward into the month of May 1st. Notice assets, capital, and liabilities. And there's our post-closing trial balance. So in the accounting cycle, highlighted by problem 4.1, there are 3 trial balances: the original trial balance of the original entries, the adjusted trial balance after you make the adjusting entries, and the post-closing trial balance after you close the books. The financial statements show the results of the operations in prepared statements that we can release to the public, and then the general ledger is now completed and goes forward into the next month of May with all our account balances transferring over to May. And that's all highlighted in the post-closing trial balance. Every business in the world who seeks bank loans, who seeks investors, who has to publish financial reports in whatever country they are in, they do this process every month, no matter what. Many of these processes are naturally computerized when you think of the sizes of the companies, but it's all basically what they're doing. Journal entries, post to the ledger, adjusting entries, post to the ledger, adjusted trial balance, financial statements, closing entries, post-closing trial balance. This is financial accounting. That's this process. And that's what you need to be familiar with as we complete our final assignment in financial accounting this coming week, week 5. So this is a great template to see how all that's done. And you might want to walk it through it as a study guide to make sure you understand what we're doing here. And remember, this is the problem we're using, problem 4.1a at the end of chapter 4, which gives a perfect example of our accounting cycle in one nice, neat little problem. Okay, just going back briefly to assignment 2 that I posted the grades from this week. Pretty good effort by everybody. Just a couple of issues in regards to making sure all the details are covered. Again, one of the things that drives anybody learning accounting about is 2 things. The language of accounting, understanding debits and credits and what we need to do in these variety of steps. And 2, you have to be detailed. You can't miss a step or you can't miss a posting. Everything is very detailed. And the reason for that is ethics. People give you money as an investor. Banks lend you money. People buy your products. People work for you. Your responsibility as a manager of a company is to prepare legal, ethical, and correct financial statements. That's your job. If you cannot do that job, your business is either going to fail or you're going to get kicked out of the business because you're not doing your job. And that's why this is so important, the details of this madness. And that's where some of us need to practice. And that's why we do these assignments to practice that. Again, here are the journal entries. And again, these solutions are posted in a file in Blackboard in the assignment 2 file folder. Here's the journal entries. Here's the ledger of those journal entries posted to the individual accounts. Here are the account balances listed in the trial balance. Notice the account balances are either a debit or a credit. You don't have a debit and a credit balances. The debit or credit balances is the sum of whatever side of the account is larger. Notice accounts receivable has a debit posted of 2,700 and a credit posted of 1,125. The account balance is the difference on the debit side, 1,575. So just remember that. So the trial balance should have one balance for each account. Now, naturally, in this case, accounts payable, we borrowed money and then paid it back. So it's a zero balance. And then you take this information, as we just saw in problem 4.1, and prepare the financial statements. Taking the revenue account, taking, in this case, only one expense account, and there's our net income, $16,975. This $16,975 goes into the owner's equity account. There's the owner investment, the original transaction of $107.50. There's the net income. And remember, they had withdrawals. There's the capital balance of K Spade. Notice the 107,725 goes down to the equity section of the balance sheet. There are no liabilities for this company. So your assets of cash, receivables, supplies, and equipment total 107,725, which matches the equity position of the company. Pretty straightforward and simple financials. They get a little bit more complicated in problem 4.1, but this is what I was looking for you to be able to take your journal entries, assign them to the appropriate accounts and determine those account balances in the general ledger, prepare a trial balance, and from that trial balance, take the appropriate accounts, revenue and expense, asset and liabilities into the proper accounts, and properly show the results of the Kate Spade Company for the month of May in their transactions. That was assignment 2. You're doing basically the exact same thing, except we're going a step further by doing adjusting entries and closing entries in assignment 3. That's the difference. So keep these notes, keep problem 4.1 in your notes or in availability to review. And that's where that will conclude our financial accounting side of chapters 1 through 4 this coming week. Okay, so this July 4th weekend, concluding week number 4, your only task for a grade is, and 5% of your course grade is to select a company to be used in your project paper that's due July 30th, in which you'll find the 10K, and more on that as we go into week 5. But I need your company selection this week. If you need any help with that, I'm around all weekend. Send me an email, send me a text. Let me know, and I can do any help you can for this weekend. I'm in town all weekend. And then on Monday, July 3rd, I will post assignment number 3 to Blackboard and post our lecture video explaining assignment 3, explaining a little bit more about the project paper once I have all your companies that you selected, and beginning our work next week on retail accounting and internal control accounting, which will be chapters in week 5 and 6. So the next 2 weeks, weeks 5 and 6, we'll be talking about retail and accounting controls. And then in week 7 and 8, we'll be talking about managerial accounting. So we're off and running halfway through our course. Hope you're getting some value of this. If you have any questions or concerns about the course thus far, don't be afraid and please let me know. Have a great and safe July 4th weekend, everybody. We'll see you again on Monday with my video. And remember to select your company this weekend. Until Monday, adios.